May profits be upon you. Let me move this mic a little bit. Excuse me, excuse me. Listen. I'm hoping that you're enjoying your weekend, right? We're going to take a look at the Euro USD. We're going to break it down from the monthly. And we're going to first take a look at the RT money meter. The RT money meter tracks the rate of change of a currency over a 15-week period. And I update it every week. I updated it yesterday. And look at the euro. Euro was ranked at number 6 last week at minus 764. This week is ranked at number 5 at minus 713. Okay. What do we need to notice about this? One, it's gaining a little bit of strength. It's gaining a little bit of strength. And when we see these little changes, after, each week it's getting worse, it's getting weaker. Then all of a sudden it starts to do this number. We see a small change of momentum. That's something to notice. Why? Because this is a risk-on asset, and the U.S. dollar is the polar opposite, is a safe haven, right? And last week, U.S. dollar still the strongest of them all. All right. Last week it was at 8.45, and at this week is at 8.39. A very small change, but it is a change, and it didn't get stronger. It got a little weaker. At the same time, the euro is getting stronger. So when you see that kind of thing happening, it's time to take notice. Now, we may see a little bit of consolidation between these two. All right. And we're going to take a closer look at that now. All right. I'm still bullish on the US dollar and bearish on the euro, but we want to be aware that there might be some change in the air, right? Let's take a look at the monthly. All right. First thing we want to notice is that momentum. Boom, to the downside. Look at that big momentum candle right there. Last month, very, very bearish going into this demand zone here. All right. Now, what we want to notice, this was a multi-year low that was broken, multi-year low. All right. That was broken here to the downside last month. All right. That's something to notice. All right. That's something that you want to make note of, because that confirms bearish momentum, right? And it's fairly strong. Also, we're hitting a demand zone in the nitty-gritty of these candles. All right. When I say nitty-gritty, I mean in the wick part, the wick demand, the wick, there's wick, I call it a wick demand. All right. In the wick part. On the lower time frames, there's of course there are bullish engulfers down there, but what is bullish order blocks. But this is demand. All right. That wick demand is really important to make note of. All right. And you can see that there was a lot of momentum, a lot of volume heading up out of this demand zone, sweeping all of this liquidity on the way up. All right. Breaking structure on the way up. Very good demand zone, right? I would classify this as a strong low. All right. So I expect some kind of reaction here. Okay. I don't expect it just to keep flooring it through. You know what I mean? I'm thinking that we're going to get some kind of reaction here. Now, also, we just broke structure. We just broke the structural point here, a multi-year low. All right. After a break of structure, don't you expect a return to impulse? You know what I mean? Maybe, it's not out of the realm of possibility that we get a retest in this area. All right, because this is not just a wick, folks. There's structure on the lower time frames here. Okay, so when price floors it through there, this looks like a mitigation point. You understand? So I'm not saying it's going to come all the way back up there, because that's quite a big ask. All right, but this area, the last time price was in this area, you saw all the rejection here. So to come through this floor is very significant, very bearish, right? We're just mapping out the possibility of these. Let's look at the weekly. All right, on the weekly, what do we see? We see that price came into the demand zone, breaking the multi-year low. But this candle, this weekly candle here did not break the low of the previous candle. Do you see that? All right. We want to make note of that. All right. This is an inside candle, and it could be an indication that price may be shifting from bearish momentum to bullish momentum. All right. That's what you want to notice. All right. This is a doji. It's a what they call an indecisive candle. Okay. But we want to see the support formed here. If it's going to hold, we want to see if this where the candle came back and retested, that is at the multi-year low, folks. Okay, the multi-year low. All right, and it is now acting as resistance. All right, where it was support, where it was strong support. Maybe we get another test of this area, and then continuation to the downside. That's what I would speculate would happen. All right, let's go down to the daily. On the daily. All right, let's see. All right, look at this pin bar all the way down. All right, lovely shooting star. Well, it's not a shooting star because it's not at the top of a rally, but it is a pin bar, and you can call it an inverted hammer. And you see these at the top of drops. Okay, and let's see. Price came into contact with the demand zone. You see how it reacted, did not take out that low yet. This low is holding thus far. All right. We did not get a bullish engulfer that says, hey, man, price is getting ready to go lower. All right. But we did get a low on Friday. We did get a close here. The candle closed bullish, but it's indecisive. The low, the wick low did break that low, the previous low, but we haven't broken the originating, the original low over here. All right, so far the support is holding, but we want to see if we get another pullback to the multi-year low. All right, this was the initial pullback. Are we going to get another one before price goes lower? Let's go to the 4-hour. All right, now what I want you to notice is, look at this long impulse. All right, some people are going to count these as pullbacks. I don't necessarily do. I think they're weak. All right, this one was important because it's at the multi-year low. Price came up and that zone of supply held, but it did not create a new low. Dig? That means there's some weakness there. What would I expect? Well, I don't expect anything. I'm just going to play it as it, play the market at the way it comes. All right. What I would like to see, what I will plan for is, we already know this is the multi-year low area and that it has retested, right? So we don't need that anymore. All right. What I would plan for is a test, a sweep. Help me here. All right. A sweep. A sweep of that high, and maybe respecting this demand zone, and perhaps we get something like this. All right, because this is accumulation. All right, we have this range. Price went into this consolidation, swept the high. We now can sweep these lows. It's not we, of course, it's market makers, you understand? But this is how they manipulate the highs. Here. All right, we're sweeping the highs. Now we get ready to sweep those lows. Does it mean that it's going to turn around? Who knows? But it'll take out those who took shorts. It'll take out those. It already took out those who. No, it's going to take out those who took shorts. It already took those shorts out with this breakout here. All right, now the the guys who are taking shorts. Those are the ones that are, I mean, the guys who took longs and their stop losses are here. If I can just explain this right, they're going to come for those stop losses. All right, so how did that happen? I lost my break line. Anyway, I'm looking for that to get broken. And swept, excuse me. I'm looking for that high to get swept. And then the low to be taken out. All right. Now, if that doesn't happen, you know, if it doesn't want to go up here, and you know, and then take out these, sweep these lows, it might just do this. You know, it could. It very well could. All right. So what am I looking for? I'm looking for shorts. This is a bearish market. I'm not going to be looking for longs. All right. If price comes down, I'm gonna tell you right now, I'm ready for either way. If price comes down here, sweeps these lows, all right, and then breaks that high, that is a break of structure. This is a change of character. You understand? I'll be looking for a pullback, and I'll take the counter trend trade up because I think this area is going to get tested. All right, this would be premium in this range. This would be in premium prices. All right, because this is the 50% right around here, all right, of this range. And this is where you want to take shorts, like I explained in most of my videos, particularly the last one. All right, so I'm ready either way. If it comes down, if it sweeps the lows on the open, if it sweeps these lows first, and then comes back up and takes out this high, the multi-year high, with a close above, I'm going to be looking for price to come back in this area so I can take a counter trend trade. All right. It'll be a counter trend trade, but it'll be after confirmation. All right. And I will take it up like I just showed you to that area. Okay. Now, in the case that it decides to sweep with a wick high, and then it gives me the pattern. You know what I'm talking about? A high, a pullback, a higher high, an impulse low that breaks that pullback low, and then a return to impulse. And that's where I will take my high probability trade short all the way down. This looks like a bear flag building, and I would love that to happen. Just look at the trading range. Top is the swing high, the swing low, anything above the 50%. And here we are at the 50%. We have a zone, a supply zone. So if price does come up here, I'll be looking for a couple of areas to take shorts from. You just got to have a plan in place, people. That's all. I'm not saying this is where I'm going to take my short. No, you wait for confirmation. You wait for confirmation. I like this area here at the 618. I prefer it to take it from here. I prefer to take a short from this area. All right. We have structure here. It's not significant, but it may be significant enough. All right, to sweep, take liquidity from these from the highs here, and then come back for these lows and the continuation of the bearish momentum. So that's what I'm looking at. We got some POIs, 1, 2, all right. And if price decides to sweep the lows first, I'm looking for price to, before I think of going long, if it starts coming back up this way, I'm looking for it to break this high here, and then catch it on the pullback like I just explained. Now, smash that like button if you would. I'm reminding you because YouTube says viewers need to be reminded, because sometimes they'll just look at it and they'll just be like, I really enjoyed that, and not leave a comment, not leave a like, not subscribe. They just said, hey, left me with a good feeling. I'm reminding you. Also, leave a comment. Let me know if you agree with this analysis. If you see it differently, let me know. I'm giving you the possibilities. All right. I'm giving you the potentials, the potentialities. All right. The potentialities. All right. But you don't take any trade. You don't enter any trade without confirmation. Right. Okay. So I'm looking for shorts. This is a bearish market. I'm looking for a continuation of that bearish trend. All right. But you want to wait for pullbacks, and you want to get it at premium prices above the 50%. All right. If that is all possible. But I also mentioned in my other videos, when the momentum is strong, looking for a full pullback is a big ask. That's why I said this is one of the possibilities that it comes back and tests that multi-year low again. That's at 38%. All right. That's the kind of pullback you can expect when there's a lot of downward pressure, a lot of momentum. Just something to consider. Okay. I will see you in the next video. Hey, check out this video to the left of you, of your screen, because these are my hot picks for the upcoming week. All right. This is Aussie dollar, and to the right will be the yen pairs, which I think there is a chance that we might see some yen strength, as it is indicating some strength. So check it out. Okay. I'll see you later.